Okay, recording has begun. So capital budgeting. Capital budgeting is the process a business undertakes to evaluate potential major projects or investments. The process involves analyzing a project's cash inflows and outflows to determine whether the expected return meets a set of benchmark. Okay, so let us answer question number one. May I know what your answers are? May I know what your answers are for question number one? Enter. Of the following decisions, capital budgeting techniques would least likely be used in evaluating the blank. Okay, remember that capital budgeting is what the business undertakes to evaluate major projects, potential major projects or investments. Those that would involve a significantly large amount of cash outflow. Okay, a significantly large amount of cash outflow. Okay, so of these following decisions, acquiring a new aircraft by a cargo company that would take a large amount, designing implementation of a major advertising program, that's a large cash outflow. Trade for a star quarterback by a football team. So, let's apply it to basketball, no? Kapag mag-trade tayo, kukunin natin si LeBron. That is a large amount. Okay? So, those that would entail a large outflow of cash, a large outflow of cash, that you might need the tools and techniques in capital budgeting. Okay? With the hope that in the long term, 1 year to 10 years from now, no? Where we talk about decisions that involve 3 to 10 years from now, no? 3 to 10 years from now, yung effect inflow, we are going to receive economic benefits in the form of cash flows. Okay, that's for capital budgeting. A, B, and C would entail capital budgeting, while letter dog adopting a new method of allocating non-traceable costs to product lines. This is not going to give you a major outflow of cash. This is not going to entail you a large amount of cash. And then the benefits of this will not necessarily translate to cash inflows in the future. This is merely an way of allocating, such as activity-based costing. Okay? So please turn off your microphone if you're not talking. Please turn off your microphone if you are not using. Paki-check na lang everyone. Okay? So adopting a new method of allocating non-traceable costs to product lines. This will not entail you a large sum of money. You'll just change the way you're going to allocate costs. And then the future economic benefits is not necessarily a flow of cash flows for the long term. Okay? Yun yung problem with letter dog. Hindi ganun ka-material yung outflow na gagastusin mo dito. Okay? Anyway, thank you for answering. Very good. The correct answer indeed is letter dog. Question number two, Wincone Company. Please enter your answers. Please enter your answers. Wincone Company is considering replacing a machine with a book value of 400,000, remaining useful life of 5 years, and annual straight line depreciation of 80,000 pesos. The existing machine has a current market value of 400,000 pesos. The replacement machine would cost 550,000 pesos and have a 5-year life. Save 75,000 per year in cash operating costs. Okay, this is going to happen per year. 75,000 per year. Savings in cash operating costs. If the replacement machine would be depreciated using the straight line method and tax rate is 40%, what would be the net and investment required to replace the existing machine? What would be the net investment required to replace the existing machine? So we're just asked for the net outflow of cash. Everyone, please answer. Everyone, please answer. So you will have an outflow for the capitalizable amount. Anong sinabi ko sa video lecture natin? In our recorded lecture, The capitalized amount includes everything that you can add up or accumulate as property, plant, and equipment. Pwede siya maging PPE na ipapakita sa balance sheet. The capitalized amount includes the price of the equipment, installation, if any, and then delivery to the premises. No? Anything that would be needed to put the asset to its intended use, no? To its right place in its intended use. That is going to be part of your PPE. The amount that can be capitalized as PPE is 550K. Okay? That is the cost of the machine. Kung meron pang delivery, isama nyo. Meron pang installation, isasama nyo. Aside from the machine, hindi naman gagana ang machine kapag wala kang inventory. Pero baka dito, meron siyang inventory sa lumang machine niya. No? Your net working capital might need to be added. You need to add your net working capital. So this is a replacement machine, tapos walang karagdagang inventory na bibilhin. No mention of net working capital here. Okay? And then you're going to replace this. You're going to replace the old one with this. No? The old one can be sold for 400,000 pesos. You can sell this for 400,000 pesos. The book value is 400K. 400 minus 400 times 40%. This is 0. 400 minus 400 times 40%. This is 0. So 400,000 plus or minus 0. You will have 400,000 as your cash inflow. No tax effect dahil walang gain or loss. Other savings during the investment point, 0. Okay, itong savings na 75K per year, mag-uumpisa yan sa year 1. When you see the words per year, it will start off in year 1. So the correct answer is 150,000 negative. The net investment is negative 150,000. Or kahit wala ng negative, it's understood that the investment will be an outflow of cash. Very good, everyone. That's how you calculate the net investment. Marami naman ang nakasagot ng 150K. This is number 3. Question number 3. Please enter your answers, everyone. Question number 3. A company is considering replacing a machine with one that will save 50,000 pesos per year in cash operating costs, 20,000 more depreciation expense per year than the existing machine. Tax rate 40%. Buying the new machine will increase annual net cash flows of the company by how much? In other words, your incremental after-tax cash flows. Enter everyone. Pakilagay yung sagot nyo. So I will start off with the long method. In the long method, you will calculate your after-tax profit first, and then just add back the expenses that do not entail cash outflow. Using the long method, you have incremental sales 0. Okay? But your expenses will decrease by 50K. Change in cash expenses, decrease 50K. Double negative is positive. Minus negative 50K kasi cash expenses ito. You will have an increase in your before tax cash flow, 50,000. Okay? Kapag sinabing cash flow, wala pang depreciation dyan. Because depreciation is an expense that does not entail an outflow of cash. When you expense depreciation, it's only an allocation of the cost of the machine over a longer period of time, say 5 or 20 years. No? However, it doesn't mean that you're going to pay in cash. You're not going to pay anything. So walang cash consequence to. But in arriving at the profit, you will deduct depreciation. Increase in depreciation 20K, 50 minus 20, your increase in profit before tax is 30K. Tax it at 40%. Tax at 40%, you will have 12,000. Change in taxes, change in income tax is 12,000. 30K minus 12K, you will have 18,000. As I've told you, in reconciling profit to after-tax cash flow, just add the expenses that did not entail a cash outflow, aka the depreciation and amortization expenses. Okay? So depreciation and amortization should be added, 20,000. Add back 20K, you have 18,000. Your after-tax cash flows per year will go up by 38,000. Or you may do the shortcut. Paano yung shortcut nito? Paano yung shortcut nito? What you need to do is to tax your pre-tax cash flow, 50,000. 50,000 times 1 minus 40%. However, hindi naman dapat yung 50K ang tinataksan. It's not 50,000 that you should tax, but 50 minus 20, the 30,000. You can look at it this way. By expensing depreciation, wala namang cash outflow, pero nakakabawas siya ng taxes mo. Although depreciation does not entail a cash outflow, it can reduce your taxes. So meron tayong tinatawag na depreciation tax shield. Plus depreciation times the tax rate. That's plus depreciation times T. You would have 20,000 times 40%. Yun na yun. No? Yun na yun. So you would have 50,000 times 1 minus 40%. It's 0.6 plus 20,000 times 0.4. You will have a total of 38,000 pesos. Very good, everyone. Mukhang lahat naman ay nakatama. No? Mukhang lahat naman ay nakatama. 38,000 pesos is your increase in after-tax cash flow. That's number 3. Now, let's go to number 4. Number 4, we have here the ARR, accounting profit over net investment. You can think of this as your return on investment. This is something like a return of investment. You divide your accounting profit by the net investment. Gusto mong malaman yung return on investment mo when you invest in the project. Your net investment may be the initial investment or an average investment, depending on what is your convention being used. Okay? Now, the problem with accounting rate of return, nakabase siya sa accounting profit, hindi siya nakabase sa cash flow. And in the video lecture, cash is king. Remember that whenever we are going to earn something without a cash inflow, nabenta mo na yung item, pero hindi ka binayaran, baliwala yun. Similarly, when you hold an asset, sabihin natin you hold a house and lot, tumaas yung value threefold, nag-times 3 yung value, pero tinitirhan mo, hindi mo mararamdaman yung increase ng value hanggat hindi siya naging cash inflow. That's a problem with the accounting rate of return. The numerator there, the measure of performance, is the accounting profit instead of the cash flow. As a result, we're not going to have a more reliable measure for capital budgeting purposes. Furthermore, it does not account for the time value of money, syempre, making ARR the weakest of all models. Then you have the payback period, which is the time period needed to recover the investment. It is a measure of the project's liquidity or cash convertibility. You have to understand that the payback period, again, the payback period does not measure the profitability of the project. The payback period is not a measure of the performance of the project. It just tells us until when we need to wait for our net investment to be fully recovered in the form of cash flows. Okay? Other variants of the payback period include the bailout period, where you would assume that the project will be terminated. When will be the earliest possible time that you can terminate the project, itigil nyo, ibenta nyo yung salvage value, and you can recover all cash flows in your investment. Then another version is the discounted payback period, where each cash inflow, you account for the time value of money in calculating the payback period. Okay, these are less popular, but sometimes they are being asked as well. So the problem with the payback period, it ignores the time value of money, except for the last one, no, in discounted payback. yung traditional tsaka yung bailout period, they ignore the time value of money and then they ignore the profitability of the project. They are just a measure of liquidity. Anyway, let us now go to Galo. Sabay-sabay na lang ha. Sabay-sabay na lang tayo sabay-sabay nyo na lang ilagay ang answer sa A, B, and C. Okay? For Galo, enter your answers please. Okay? Everyone please answer. Isama nyo na yung A, B, and C. Isama nyo na yung A, B, and C sa inyong sagot. Gala has an investment opportunity costing 300K, expected to yield the following cash flows over the next 6 years. So the items given here are actually cash flows. What's the payback period of the investment? 300K yung net investment. Year 1, you can recover 75K of it. By the end of year 1, kulang ka pa ng 225,000. Year 2, meron kang 90K, kulang ka pa ng 135K. Year 3, 115K, kulang ka pa ng 20,000. But year 4, you will have 130K. You do not need to finish year 4 in order to recover the entire 300,000. Your payback period is less than 4 years. So what assumption are we going to make with regards to generating 20,000? I-assume natin that cash flows are generated throughout the year. Okay? So yung 130,000 pala, no? Yung 130,000 na yan, you're going to generate equal levels of cash inflow every year during year 4. 130,000 divided by 365 days, yun yung daily cash inflow mo. Yun yung daily cash inflow mo. No? 20,000 divided by 130,000 para malaman mo kung ilang years kailangan. 15% of 1 year. Again, you will assume that in year 4, the 130,000 will be generated evenly throughout the year. Pantay-pantay yung cash flow araw-araw dun sa year 4. Hintayin mo lang makompleto niya yung 20 out of the 130K. 20 over 130K, 15% ng year 4, no? Yung 1 year, yung year 4 na yan. 15% of that yung hihintayin pa natin. We need to wait for 3.15 years. Very good. The correct answer for letter A is 3.15 years. Boy, find the book rate of return of the investment or the accounting rate of return. The accounting rate of return can be arrived at by dividing the profit over the investment, just the return on investment. What is given, however, here are cash flows. So to arrive at your profit, you need to deduct for depreciation. No need to worry about taxes. There are none in this case. 75 minus 50, 25K. 90,000 minus 50, that's 300,000 divided by 6. No? That's 300,000 divided by 6. You would have 50,000 in your depreciation. Okay? Again, that's 75K minus 50K. 90K minus 50K. 115 minus 50K. You have 65,000 and so on. Note that the profit figures are different for each year. Note that the profit figures are different for each year. You have no choice but to simply take the average of the six profit figures here. Your average net income per year is 50,000 pesos. So in calculating the accounting rate of return, you divide the profit by the investment. 50K over 300,000, that's 16.67%. If you are using the initial investment. But if you are asked to use the average investment, i-assume nyo magiging zero ito by the end of year 6. Assume that this will become zero by the end of year 6. 300K plus 0 divided by 2, you have 150,000. 50K divided by 150K is 33.33%. Depending on what is asked in the problem, either of the two are acceptable. Either it's 16.67% or 33.33%. That's the correct answer for letter boy. Those are the possible correct answers for letter boy. Okay? Letter C, we have to find the NPV of the investment, assuming a cut-off rate of 10%. Ilatag nyo mga cash flows. You will have an outflow of 300K in year 0. And then every year after that, you will have cash inflows. 75K in year 1, 90K in year 2, and so on until year 6, you will have 90,000. Hindi pantay-pantay ang cash flows, hindi natin magawan ng annuity. We cannot use annuity. We have to use lump sum present value for each year. Isa-isahin natin. 1.1 divide. Press the equal sign, you have 0.9091. Press the equal sign again, that's 0.8264, and so on. So just take the present value of these six cash flows, add them all, you will have 430,644. 430,644. The correct answer is 130,644 or anything close to that. No? Basta malapit dyan sa sagot na yan. 130,600 something. Those are acceptable. Okay? Net present value at a cut-off rate of 10%. Clear? Okay. How about the next problem? How about the next problem? Please answer this one. Everyone, enter. Okay. Kel Incorporated, everyone? Kel Incorporated, everyone? Okay, may mga sumagot ng C, may mga sumagot ng boy. Everyone, please answer. This is Kel Incorporated. Kel Incorporated is analyzing an investment for a new product expected to have annual sales of 100,000 units for the next 5 years and then be discontinued. New equipment will be purchased for $1.2 million and cost $300,000 to install. The equipment will be depreciated on a straight line basis over 5 years for financial reporting purposes and 3 years for tax purposes. 3 years for tax purposes. At the end of the 5th year, it will cost 100,000 to remove the equipment, which can be sold for $300,000. Additional working capital of 400K will be required immediately and needed for the life of the product. The product will sell for $80, direct labor and material costs of $65 per unit. Annual indirect costs will increase by 500K, effective tax rate 40%. So what I highlighted here is the fact that in a lot of cases, your tax depreciation and your accounting depreciation may be different. Posibleng iba yung method ng pag-depreciate sa machine for tax purposes at doon para sa accounting purposes. No? For tax purposes and for financial reporting purposes. Clear? Okay tayo dun, ha? In case of conflict, you follow the tax depreciation. In case of conflict, you follow the tax depreciation, ha? Follow the tax depreciation. We're interested with cash flow, not the accounting profit. So ano yung may consequence sa cash flow? Yung tax effect nung depreciation, which we call the depreciation tax shield. The product will sell for $80 with direct labor and material cost of $65 per unit. Annual indirect cost will increase by $500,000. Kel's effective tax rate, 40%. In a capital budgeting analysis, what is the expected cash flow at time zero? This is the last year of operations, no? The 5th year of operations that Kel should use to compute the net present value. Okay? Let's start with the after-tax cash flows from the operations. Let's start with after-tax cash flows from operations. Change in sales, that's $80 times 100,000 units. 80 times 100,000, you have $8 million. Change in cash expenses, may variable tayo at fixed. $65 times 100K plus $500,000, you would have $7 million. Your before tax cash flow will increase by 1 million. And take note, for tax purposes, 1.5 M divided by 3 years lang. So magkaka-depreciation tayo sa years 1, 2, and 3 only. With year 4 and year 5, hindi magkakaroon na depreciation. So no depreciation to be recognized in year 5. 1 million minus 0 is $1 million. The change in profit before tax. And then you have change in income tax of 40%. 1 million times 40% is 400K. You have $600,000 your profit after tax. At dahil walang depreciation na dineclare dito, wala ka ring i-add back. Your after-tax cash flow is $600,000. Malinaw? Okay? Malinaw? Okay, paano naman yung shortcut niyan? Paano naman yung shortcut niyan? Paano yung shortcut niyan? Okay. So pagdating sa after-tax cash flow, you would have BTCF times 1 minus T plus the depreciation tax shield. No? So 1 million times 1 minus 40%, you would have 0.6, no? You would have 600,000. Wala kang depreciation tax shield dito. Wala kang depreciation tax shield dito. No? There's no depreciation tax shield. That's 0 times 40%. There you go. So 600,000 plus 0, you will have 600,000 as your after-tax cash flow from operations. Because this is year 5, what would happen is, no, because this is year 5, what would happen is we're going to recover the working capital. At the start of your investment, no, at the start of your investment, ang nangyayari kasi, no, so umpisa pa lang ng investment, ano yung nangyayari? Bibili ka ng machine, kailangan mo ng pandagdag pa. No? You need working capital. You need to buy inventory. Yung inventory na binili mo, papaikutin mo lang yan. No? You buy the inventory, that's an outflow of cash. You sell, buy, sell, buy, sell. No? Paikot-ikot lang yung pera. But if it is the last year of your operations, yung pera na na-release mo dun sa working capital mo, when the AR is collected, all inventory is sold, you do not need to add back your inventory. Hindi mo na kailangan bumili ulit ng inventory kasi titigil ka na. So kung titigil ka na, pwede mo nang bawiin yung 400,000. So what you're going to do here is to add 400,000 to 600,000. Also, yung machine pwede nyo nang ibenta. You can sell the machine for 300K minus 100K cost to remove. That's a gain of 200. Yang gain na yan, that's a taxable gain. Magkakaroon ka kasi ng income statement exposure dyan, no? Magkakaroon ka ng tax exposure na 200,000. Itatax mo yan at 40%. 40% of 200 is 80,000. 200 minus 80K is 120,000. 200 times 40% is 80,000. So 120K na lang. No? So the net effect of that is 120,000. Clear? Paki-add na lang ha. 400K plus 120K plus 600,000. I think the answer is C. Yeah. 1,120,000. Okay? $1,120,000. So very good. Majority naman sa inyo ay nakatama. Letter C. 1,120,000. Okay? So kapag last year ng operations, maliban sa after-tax cash flow from operations, itong 600K, do not forget that you might have to consider, no? Pwede, yung salvage value ng machine na binili mo at ginamit mo through the years, tsaka yung recovery of working capital, if these are present. Correct answer is C, $1.12 million. Next, discounted payback period. Question number 6. No? This is already number 6. Enter your answers, everyone. Enter your answers, everyone. Enter your answers, everyone. FCB Industries is evaluating 2 projects based on the discounted payback method. The company's WACC is 12%. Project A is deemed to be of average risk, but Project B has a very low risk. So the company has decided to adjust the discount rate by 2% for Project B. The investments and operating cash flows follow. Okay? Calculate the discounted payback period for Project B. Okay. Now, your WACC here acts as your required rate of return. The WACC here acts as your required rate of return. Kapag masyadong risky yung project, tataasan mo yung requirement mo. Diba? The higher the risk, the higher the return required. Okay? The higher an investment's risk, the higher you are going to require from it as return. So, if the project is high risk, you're going to increase your discount rate. When the project is low risk, you're going to decrease, no? You're going to decrease. So what happens here is that project B has a very low risk. So the company has decided to adjust it by 2%. Pag low risk, binabawasan natin. So what we're going to do is we're going to look at this column. 10%, no? Tapos si project B ang pinag-uusapan natin. Calculate the discounted payback period for project B. So in year 0, mamumuhunan daw ng 6K, 6,000. In year 1, it will generate 3,000 times 0.9091, taking into account the fact that it will be generated a year from now. It will still be generated a year from now. So 3,000 times 0.9091, you have 2,727. Okay, 2,727. Okay lang? Okay. 6,000 negative, that's 2,727. You will have 3,273. You will have 3,273. Kulang pa, no? 3,273. Year 2, that's 2,250 multiplied by 0.8264. You would have 1,859. 1,414. Year 3, 1,750. The PV factor is 0.7513. That's 1,315. Okay, 1,315. And then for year 4, masyado na tong sobra, no? 1,5 times 0.62, sorry, 0.6830. 1,5 times 0.6830 is 1,025. So negative 99 plus 1,025, okay? Sobra na to. You will only need 99 divided by 1,025. That's around 10% of 1 year. 3 plus 0.10 years, you would have 3.10 years. The correct answer is letter C. The correct answer is letter C. Okay lang? The correct answer is letter C. Okay? 3.10 years. How about this one? Question number 7. How about this one? Okay, everyone, please answer. Everyone, please answer. A corporation uses NPV techniques in evaluating its capital investment projects. The company is considering a new equipment acquisition that will cost 100,000 pesos, fully installed and have a zero salvage value at the end of its 5-year productive life. The corporation will depreciate the equipment on a straight line basis for both financial and tax purposes. The corporation estimates 70K in annual recurring operating cash income, 20K in annual recurring operating cash expenses. The corporation's desired rate of return is 12%, effective tax 40%. What's the NPV of this investment on an after-tax basis? Okay, meron kasing tax impact ito. So kailangan natin bantayan yung magiging after-tax cash flow. Although the BTCF is easy, 70 minus 20, this is only 50,000. No? 70K minus 20K, that's 50,000. Okay, take into account the fact that may depreciation tax shield do kasi may tax, no? 100K divided by 5 is 20K times 40%. The tax rate, that's your depreciation tax shield. ATCF is BTCF times 1 minus T plus depreciation times T. Okay? So you have 50K times 0.6 plus 20K times 0.4. Your after-tax cash flow is 38,000 pesos. After-tax cash flow is 38,000 pesos. Okay lang? Sige. Year zero, your only investment here is 100,000. Okay? Fully installed na yan. And then zero yung magiging salvage value sa 5-year life. Every year, you are going to generate 38K annually for the next 5 years. So 38K, pwede to gamitan ng annuity. The required rate of return is 12%. 1.12 divide 1, 2, 3, 4, 5 minus 1 divided by 0.12. You will have 3.6048. 3.6048. Multiply it by 38,000. Okay, multiply it by 38,000. The value of the project is 136,982. 136,982 minus 100,000, you have 36,982. The correct answer is 36,982. Yun yung net present value niya. Clear? Okay, next. Don Adams Breweries. Don Adams Breweries. IRR of the investment. Enter your answers, everyone. Game? So Don Adams Breweries is considering an expansion project with an investment of 1.5 million pesos. The equipment will be depreciated to zero salvage value on a straight line basis over 5 years. The expansion will produce incremental operating revenue of $400,000 annually for 5 years. The company's opportunity cost of capital is 12%. Ignore taxes. What's the IRR of the investment? Wala kang choice dito kundi gumawa ng trial and error. Wala kang choice dito kundi gumawa ng trial and error. So every year, you're going to generate 400,000 per year doon sa 1.5 million na in-invest mo. Okay? So at what discount rate will this 400Ks have a PV of 1.5M para mag-zero ang NPV? To arrive at the IRR, you look for the discount rate that will give you a zero net present value. Using trial and error, you should arrive at 10.4248%, no? Or simply 10.4%. Okay? So kahit 10.4% lang, that's acceptable. So at a PV factor of 10.4%, you will have at a discount rate of 10.4%, you will have a PV factor of 3.75. You will have a PV factor of 3.75. 400,000 pesos times 3.75, you have 1.5 million. You have 1.5 million. Okay? So you will have a zero and you will have a zero net present value if you will discount these cash flows at 10.42%. So again, to arrive at the IRR of the investment, what you need to do is to conduct trial and error that will arrive at a zero net present value. In this case, that discount rate is 10.42%. That's number 8. Number 9, we have 2 more to go, no? Number 9, what's your answer? Enter everyone. A firm has the following investment opportunities. A firm has the following investment opportunities. Required investment, outlays, and the profitability index for each of these investments are as follows. So project 1, 2, 3, and 4. Ayan yung investment cost tsaka yung PI nila. The firm's budget ceiling for initial outlays during the present period is 1.5 million pesos. The proposed projects are independent of each other. Which project or projects would you recommend that the firm accept? Okay. Which project or projects would you recommend that the firm accept? If you can only select one of them, the case is called mutually exclusive projects. Kapag mutually exclusive yung mga projects, you choose the project with the highest net present value. Why? The project with the highest net present value will give you the most shareholders value. Remember that in corporate finance, we would like to maximize shareholders' wealth. No? Our goal is to maximize shareholders' wealth. So when the projects are mutually exclusive, meaning to say you can only choose one, choose the project with the highest NPV. When the projects on the other hand are independent, when the projects are independent, all of the projects that pass the test would be acceptable. Kung hindi mo kailangan mamili ng isa lang, piliin mo lahat ng projects na pumasa. NPV greater than 0, no? Positive NPV, IRR greater than WACC, PI greater than 1. All of them will be consistent, no? Kung sino yung pasado sa NPV, pasado rin yan sa IRR at sa PI. Kung sinong pasado sa PI, pasado rin yan sa NPV at IRR. So when the projects are independent, you would select all projects that are acceptable using any of the techniques. Okay? Mutually exclusive, isa lang yung pwede mong piliin, prioritize the project with the highest NPV. Now, if you're going to notice this problem, the investments are considered independent of each other. Pwede ka mamili ng more than one. However, meron kang budget ceiling. You have to ration 1.5 million pesos. Kailangan mong irasyon yung 1.5 million pesos. Okay? Kung sino yung makakatanggap. Sinong unahin mo? Choose the project with the highest value per peso of investment. When you prioritize products in the previous topic, when you prioritize the product, which product to choose to produce first, you choose to produce first. you select the one with the highest margin per constrained resource. Dito naman, yung constrained resource natin, yung investment funds natin. It's only 1.5 million. Choose the projects with the highest value per constrained resource. In this case, per investment. That is what the profitability index is doing. It is giving us an idea as to what project has the highest value per peso of investment. Okay? Automatic, bagsak na si Project 1. Automatic, bagsak si Project 1. Less than 1 ang kanyang PI. Now, among Project 2, 3, and 4, the highest PI goes to Project 3. So with your 1.5 million capital, you prioritize Project 3. 1.5 M minus 650,000, you would have 850,000 pesos. Next, meron pang pondo. Second priority is Project 4. You have 750,000 pesos. Okay? 850K minus 750K is 100K. Okay? So, yung sobra mong capital ay 100,000, hindi na kasya si Project 2 dyan. So, given the constraint of 1.5 million pesos, you can only prioritize projects 3 and 4. No? Si Project 3 at si Project 4 lang yung pwede natin i-cater. No? Hindi na natin kaya si Project 2. Hindi na natin kaya si Project 2. Okay? Kahit pasado yan. Prioritize the projects with the highest value per peso of investment required. That's the rule for capital rationing. Okay, last question. Last question. Everyone please answer. Ilagay nyo na yung sagot for A, B, and C. Okay, game. Zenex is considering the purchase of a machine. Data are as follows. So ito yung data given. Everyone, please give me your answers. Everyone. You have the cost of 240K, useful life 10 years. And then you have expected annual straight line depreciation. Ayaw pa niyang ibigay. 240K divided by 10 is 24,000. 24,000. Expected annual savings in cash operating costs is 80K. That's every year. Annual yan, no? Additional working capital needed, 100,000. Cut-off rate, 12%. Tax rate, 40%. First question, compute the annual net cash flows for the investment. Compute the net cash flows for the investment annually. Bago yan, kailangan nyo munang makuha yung annual depreciation. Okay? Net investment, negative 240K, and then net working capital, negative 100K. Your net investment is 340,000. Now, your depreciation per year is 240K divided by 10, 24,000. So after tax cash flows, 80K yung annual savings, no? 80K times 1 minus 40% plus depreciation of 24K times 40%. You have 48 plus 96, 57,600. You would have 57,600. So when you compute the annual net cash flows for the investment, it's 57,600. Okay, 57,600. Year 0, outflow of 340K. Year 1, 2, 3 until year 10 is 57. It's 57,600. Pagkatapos, ano nangyari? Sa last year ng operations, mababawi mo yung net working cap mo ng 100K. Walang kasing salvage value yung machine. Okay? So this is 12%. 1.12 divide. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That's 0.32. 0.3220 minus 1 divided by 0.12, you would have 5.6502. The annuity factor. 57,600 times 5.6502 plus 100,000 times 0.3220, you will have a value of 357,652. Minus 340K, you would have an NPV of 17,653. Okay? So that's 17,653 or 52 or 16,000, 17,600 something. That would be acceptable. Yung PI, i-divide niya lang. 357,652 divided by 340K, that's 1.052. Okay, 1.052. That's the correct answer for letter C. Okay, highlight ko na nga mga sagot. Okay, letter A, letter B, and then letter C. No? Yan yung PI, 1.052. Do you have any questions in these exercises? Meron ba kayong mga tanong in these exercises? Wala pala akong volume, no? I mean, hindi ko kayo naririnig. Anyway, hayaan nyo na. Okay. So you may use the chat box or you may use your mic. Okay. Does anyone have any question? Okay. Tigil ko na yung recording, ha? Stop recording ko muna.